All right, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, February 10th. Michael Boutros with you on the horn, guys. We're about to get the release of U.S. core inflation. Just keeping my eye on the tape here. We're expecting a pretty strong read. Again, 7.3% is the expectation on the headline figure, 5.9 on 5.9 on core inflation headline figure is supposed to be 7.3. So with that, we've been watching the dollar, we've been watching the euro. Things have been kind of in this holding pattern ahead of this release. And again, just keeping an eye out here. CPI prints at 7.5% versus 7.3. So that's a much not a much more stronger expected print, but you're seeing some dollar strength here. Core inflation 7.5, headline 6% versus the 5.9 expected, and continuing jobs printing at the same time also a little bit higher than expected. So inflation, more or less, as we've seen, is running hot. The dollar is going to see some strength here. We're looking at this near-term resistance levels, guys. We'll go over all of these. Just wanted to keep this open at the moment, but your weekly opening range is preserved here. So for the dollar's part, for the euro's part, both of them knocking on the door, if that weekly opening range objectively breaks, that'll give us at least a near-term move. If we get a break to the downside in euro, it's 113.60, 113.44. Near-term resistance is still 14.45, but okay, we'll continue to track these and see if we get the break. Good morning, everyone. So it's great to see you guys in the room. We got a menu today of some interesting crosses and interesting assets. Obviously, we'll start off with, okay, looks like it's going to be a dollar strength story here. Bear with me one moment. Okay. Okay, sorry about that. So the menu starts off with DXY. We'll hit gold with a move right here. I do want to see what gold is doing. You should be seeing some downward pressure. Yep, there it is. SPX will hit euro, dollar CAD, Kiwi dollar, Aussie dollar, sterling dollar, and take a look at what we're doing with Bitcoin. Oil, yeah, we can take a look at oil. It's at resistance. I have us on a decent little pullback, and it is in fact pulling back, but I don't necessarily think it's a playable event or a tradable event per se. But I'll show you the gold levels in a moment, sure. All right, so let's get the party started. Sorry about the little slow start there, but I wanted to make sure we got out that release. And the focus for the dollar, back from the weekly chart, has been on what we do here. This was a pretty severe exhaustion. We talked about this on Monday. I don't want to go over this again, but you know, higher highs in momentum, lower highs, or high highs in price, lower highs in momentum, really a hallmark exhaustion. The pullback slamming all the way back down into the October 27th high, 95.15. We talked about that into the start of the week. That's sort of my line in the sand, guys. Just below, okay, is where you risk a lot bigger of a sort of correctionary move. But as it stands right now, here's DXY in the daily chart. Here's your low day reversal close. It was an outside day reversal for the year, for January, 95.15. Here's the recovery. So if this is, okay, looking pretty good here. If this is a break of the objective weekly opening range, here's your weekly open. You set a high, you test that high, you go back and test the low. This is a break of the weekly opening range. You should be looking for that late week high. Now, initial targets on the upside, if we make it through this slope right now, is 96.07, 96.01. That's a basic 38.2 from the decline. Nothing fancy. Okay, and just to get a little more granular, if you're a little bit more conservative about this bounce and you think it might not be a legit breakout, 2 equal legs takes you into stop traffic 96. Okay, so either way you look at it, going for a move on 96. And near-term support, bullish invalidation has to stay at 95.15. 95.16, by the way, guys, is the objective monthly opening range too. It's your monthly open. So any, all things held constant, a break of uptrend support, a break of the monthly lows, that's your bullish inval. Right now, I'm looking for a move on 96. Any questions on DXY? That was the largest event risk for the week, guys. Okay, and way hotter than expected. I mean, not way hotter, but a 7.5% clip on an inflation year on year. That is above 40-year highs. Core inflation at 6.6%, 6 flat rather, is still above expectations, which was 5.9. The interesting is we didn't get any upward revisions to the previous read. All right, so keep that as it, just something to keep on the side there. But inflation's running hot. Inflation's running hot. The Fed's going to have to move to on rates maybe faster than the markets are expecting, and you're seeing dollar really getting some lift here. Now, as I said earlier in the week, the inflationary expectations are, or excuse me, the interest rate expectations are all across the board, Fed dot plot, which we do get the update in March. As of now, the last one showed 3 to 4 hikes, right? You got Bank of America calling 6 hikes. You got Chase, JP Morgan saying 7 hikes. I mean, it's getting nuts, right? But every time you get one of these higher inflation reads, really strong employment reports, that adds sort of fuel to the fire, puts more pressure on the Fed to have to move earlier. So that's DXY. Any questions on this? Hello, Michael. Hope your daughter is better. Oh, thank you so much, E-Man. God bless you. Yeah, slow recovery, but we are still in quarantine in our home. So it's been a fun few days, but thank God. Thanks for asking. All right, let's move on. Gold, number 2. So higher rates typically will be something that weighs on gold. Here's what the gold trade looks like, and it's very fake out territory here, guys. It looked like it was breaking out yesterday, but this is what I wanted to keep your focus on, the weekly chart. Do you remember this? We've been in consolidation within last year's range. It's very important to note that we're still in this series of lower highs, series of higher lows. We made an outside weekly reversal 2 weeks ago. We noted that every time we've seen an outside weekly reversal in gold, it's averaged somewhere in the range of 13 to 14% on the downside. So the threat for the larger correction is there, but that only materializes if we break uptrend support. So yes, last week, what did we do? We rebounded off of a beautiful zone. The 618 retracement, the advance off November's at low right here, and the 52-week moving average. Perfect support, perfect rebound. Now, resistance, again, basic trendline resistance off last year's high. 1, 2, 3 touch confirms. We touched it again in January. That's just a bit higher. Daily chart looks like this. You had a pretty nice multi-day rally here. We looked like we were breaking above that 1830 level. I noted that many times with you guys. That should have pivoted and kept the focus higher towards that slope. Here's what looks to be a possible outside day reversal today. What was the high? 1835, 1836. Yeah, if this materializes this way, it will be an outside day reversal. And again, typically a bearish hallmark, a bearish development. So is this an exhaustion blow off is what I'm starting to ask myself. Eman says I'm short from 1830. I think that's a decent play. I think that's the way you play it, Eman. But you have to look how the US Open materializes. This is the pivot zone. For me, it's 1830 into 1825. That's the 618 of the yearly range, essentially the January range. So a basic pitch off the low here, was pretty decent yesterday in catching that advance. Is this a break? At the end of the day, you want to see this break for the lower parallel to kind of give you invalidation of this immediate advance. Weekly open is the bullish invalidation level still, that's 1807. Yesterday and today's high at the same level, 1830, almost to the dot. It's interesting, I didn't have something at 1836, man. Let me know if you were looking at something there. The only thing I was looking at last night was this slope to see if it kind of catches, but certainly a decent reversal here. Momentum divergence, trigger break, all the hallmarks. We just need follow through below 1825. So you'd want to see like an hourly close below that to kind of at least suggest near-term exhaustion is in. So play this one close to the chest, man. You have a very decent entry, but I wouldn't get too comfortable. All right, questions on gold. Watch today's close, where we close with respect to that 1830 level. She says, okay, I got you. Right on. Right on. All right, SPX number 3. And certainly has been an interesting play. The breakout that we were looking at yesterday could be faltering, and that's what I'm looking at today. First, a quick look back along memory lane. SPX on the weekly charts. Just wanted to highlight, I showed you this on the Monday webinar, on the Tuesday webinar. All of the slopes we've been following for the last year and a half are derived off of this original slope. We broke below this original slope. We tried to break above it last week. That converges on the highs here, basically around 45.37s, 45.35. All right. We need to close above this to at least alleviate the immediate downside pressure. Okay. So watch the close of the week. This is going to be critical. This is going to be critical. If we close above it, again, it would give us lift, at least for a larger recovery, I think. But all things held constant, this slope has been solid. And if we break this slope, look for resistance there first. A weekly close above this would keep your focus on the high week close near 46.77. But this is the weekly focus for me on SPX. So here's the daily chart. All right, this basic high, low, high pitchfork we've been following, which caught the lows. Median line was resistance. Once it broke, it accelerated. We failed at the 618. If this breakout is legit, and yesterday we did close above it, but failed at the 618. If this breakout is legit, we should find support right here and then be looking higher. If we open today's trade session, guys, and we duck back below this formation, it's a hallmark exhaustion. Here's what it looks like on the intraday chart. Let me get you a further out view. Here's the 240. All right. Top side break. This is the first test of support. If we bounce here and break 45.92, that's your classic technical analysis. Break of resistance, check of support, move right on. So that's what I'm looking for today. You need the buckle above 45.92 to get resumption. Then you're looking for 46.70, 46.90. Okay, former slope support there, turned resistance, nice 786. If this buckles back below, these levels are unchanged. The high was never taken out, guys. So you're looking right back at 44.50 right back again. So critical juncture for S&P 500 here in broader risk assets. And you'll ask yourself, well, what does higher inflation mean for stocks, right? Well, the concern is that that would prompt further or quicker, not only interest rate hikes, but QT, quantitative tightening. What does that mean for broader risk? Typically, that would be bearish for risk. You're sapping flows into risk assets with higher yields, whether it's on treasuries or whether, whether you're concerned that you're going to see the market start to tumble and people start ringing the cash register and just booking profits. So it's absolutely critical, and this week will be absolutely critical for broader risk assets. All right. Did you cover euro? No, I did not cover euro. I'm also short from 1480. Okay, yeah, I'm short euro too, just for a disclaimer. Let's go ahead and jump into euro. That's number 4. All right. So no change to any of the levels from last night's, from this update on the 28th. DXY is sitting right here. We just broke resistance. Again, we talked about gold and this level right here at 1830. Watch, we just broke above it and buckled below, but the levels are unchanged. SPX levels, we just went over that, unchanged as well. Looking to see what we do between the resistance level at the 618 and former slope support. Again, if we break back below this, guys, I think you get a bigger spill. All right. Euro dollar looked like this. This was last night's update. And right ahead of this release, I kind of wanted to take a snapshot, see how this plays out, because I was looking for the pullback. Now, ideally, we get like 1344, right? I don't know if we get down that low, but at the end of the day, that's a basic 38.2. The median line for this basic high, low is right there. Basic uptrend support, okay, from the lows is right there as well. So I'm kind of hoping we get some play there. Really quick, here's euro from the top down. Remember, from the weekly standpoint, euro's at resistance, major pivot zone. 2019 yearly open, the 2019 high day close, this pivot zone between 1445 and 1500 basically has been major, right? Resistance all throughout that year, resistance all throughout 2020 before the break and accelerated rally. Again, a break and accelerated drop. It's this year's opening range high. So inherently, you're at resistance. Now, I don't want to get too comfortable, because if this breakout is legit, this pullback should kind of peter out near 13 maximum before the next leg higher. What does that look like? Well, here's euro on the daily charts. Okay. Pitchfork, we've been following off the high. Boom, boom, boom. Resistance. Again, we just went over 1445, that 2019 open. Again, your high close for the year is right there at 1450 as well. So it's loaded here, loaded, okay? So pull back to the median line, first level, look for a reaction there if it manifests. Break above 1445, again, you need 15 to really clear the way. You're on the intraday chart. You're short from 1480, nice entry. Well played, Eman, well played. Wow, what did you top tick that? Geez. All right, the January high is 1482. Okay, really nice play. I was doing some short, really near-term analysis on this earlier today. If you look at this at like a 120, 2 equal legs off the high, gives you 1360. Again, that 38.2 retracement gives you 1345. Kind of a nice zone for support. So I'm looking for some sort of reaction here if we get it. 1383 is the objective yearly open for this year. So as we go through that right now, you can see we've already looked at an initial, here, if I get this at like a 5-minute chart, right? You can see the initial drop actually already rebounded there, just ahead of it, a couple of pips ahead of it, right? This is how you can ascertain efficacy in your levels. And again, it's not my level, it's 13, that's where we opened the year, right? That's just where the market's open. So pay attention in near-term price action as well. I do have that as a soft target, but really it's going to be this key zone to 1340 to 1360. That is your setup, Michael. Thank you. Cheers, man. It's not my setup. I always say it's the market's levels. I'm just helping you find them. Any questions on euro dollar? Man, red hot inflation, 7.5. That's nuts. Didn't think I'd see that in my lifetime. All right, dollar CAD number 5. Here's what loonie looks like. So this one's been a little bit frustrating for me because we've been unable to just clear the damn range. You know, we're just contraction, contraction, contraction. Here's what dollar CAD looks like on the weekly charts. And here's kind of the update as I showed it to you yesterday. The focus for this week was we pulled back off of main resistance last week. A 618, the drop from the December highs, the high week close from all of last year. That's 27.68 to 28.14. It's exactly where the rally failed. Here's the pullback. So the question becomes, do you ride the upslope for a little bit longer, or do you get the deeper correction? It's been very frustrating for me. On the near term, though, it's been pretty tight. So again, here's your daily chart, and here's what the daily chart looks like right now. It's very clean and tidy monthly opening range, right? Here's your monthly open. You set a high, you set a low, you set a low, you set a high, you test the lows, and here we are sitting in the same exact range below Fibonacci resistance, right? It's pretty frustrating. I'm looking for a move in CAD. I just can't get it. I just can't get this thing to move. Ideally, you actually get a move lower first, and then we rally. I know that James is looking, or Jamie rather, is looking at that. But here's what it looks like on the intraday charts. Okay, if anything, you're getting a little bit of a pop here. Okay, here's what it looked like last night. The main focus has been for the last week or so a break of this near-term range. 38.2 is 26.65. That's initial support. A 26.40 break, that's the yearly open. That would be your shift lower. Near-term resistance at the high day close. The 618 off the high, like I said, that's 27.67. That's still resistance. So you can see it's not really exciting trade. Here it is on the 2 hour. You know, for the last 2 weeks, we've just been in contraction. So yeah, maybe you get a rally back towards the upper bounds of this contractionary range. Maybe you touch that again before moving off. The ideal scenario, again, is that you buckle back below this for a little bit of a pullback, ideally to buy again, but I'm just not involved in this one. I'm just not involved in this one. Might be a good, if you're trading short euro, right, which is a long dollar CAD position, which is a long dollar position, that might be a good position to kind of try to fade this rally. If you get faltering towards the weekly open, if you get a rally towards here and you start to see some exhaustion, kind of offset, sort of a synthetic hedge, if you will, for broader dollar exposure, but it's been still range bound. I'd rather be trading something that's breaking out of its weekly opening range like euro is, right? So keep the powder dry here on dollar CAD. If you're not involved, we're still in near-term consolidation. Any questions on euro? Or excuse me, on dollar CAD. All right, Kiwi dollar, number 6. Don't really have a play on this one, or at least I haven't gotten involved on it, but I did want to highlight what we were doing yesterday because it looked pretty interesting from the broader charts. So the weekly has us coming off of downslope support, right? Really tight channel off of those highs that we made in October of last year. Support, boom, here's the rebound. Now the level of 67 to 67.33 is critical. When we've talked about this level at length, it was the 2020 yearly open, it was the 38.2 of the 2020 rally. And last year it converged on the downslope. Didn't break till later, but we were looking at this level for some time. We just checked it as resistance this week, and I want to see how we close. Bearish invalidation for Kiwi is 67.33. So to invalidate sort of this broader downtrend, this really, really sharp downtrend, that's the level you need to close a week above. And even then, you're only invalidating this downtrend. You're still in the confines of this downtrend, right? Also, remember, note what we always like to talk about, a break of downtrend support oftentimes should be the sharpest part of the decline. So if that's the deal, then this recovery should be rather shallow before all of a sudden accelerating lower. Okay, these are all things to look at. Again, this is 1,000 feet up. This is not giving us any help right now, Mike, right? But here's the daily chart. It's important to know where we are in the broader term. Here is the daily. Again, right? Really nice. Bounce off the lower parallel. Here's the recovery. And here is the monthly opening range. Yesterday, we broke above the monthly opening range, but closed well below, or right there at it. Here's today's candle. Obviously, we're trying to push higher earlier. Hot inflation numbers, pulling it back. But what I want you to focus on is this pivot slope. Okay, this pivot slope right here. Resistance, here's the break above. If we're breaking higher, the pullback may fail like somewhere around 66.30s, and then you move off, right? If we get back below that slope, then I think you're on track. We're right back to 64 again. 64.70s was the initial major support zone that we were looking at when we broke. So looking at it even closer, here's the 2 hour, right? What I wanted to show you yesterday is look for possible exhaustion. The levels were 67.10 here, but it's really, this is the better zone. These are my favorite Fibonacci confluences, I tell you all the time. 100% extension off the low, 618 retracement off the high, uptrend resistance. It all's focused right here. So look, I don't know if that calls it out. At the end of the day, if we break below the slope and lower, I wouldn't even look for a break of the weekly open. You know, if we break that slope, you're probably just looking for a test of the monthly open at 65.75 and beyond. But until we break that basic uptrend, you know, the focus is still for the risk for 67.50s. Questions on New Zealand dollar? You got business PMI figures coming out later tonight from New Zealand, but nothing major. Haven't been in this one. It could have been a good option if you didn't take euro. This actually could have been a decent option, but I just didn't like that we didn't have a resistance zone to come off of. You know what I mean? Again, cherry picking your moves, guys. Euro had a really strong resistance zone. So on entry, I already know that the 2019 Open is a level we've been watching. I know that we've been getting many pivots there. We even got some pivots there, right? But when you have something like Kiwi, I would have liked it to be closer to that 50 or even better yet. So some of them you catch, some of them you don't. Don't get FOMO here. And by the way, if the US market's open, guys, just for consideration, right? Euro just takes back the whole thing. A pivot back above these highs actually shifts the focus higher. Just in case it ends up being like a whole out reversal candle. Not my favorite scenario, but something to know. So by the way, there's 1385, 1383 rather. We already got the first touch here and a little bit of a bounce. So another reason why you just want to keep your eye on these levels. If you're short, I didn't, by the way, because I was just talking to you. But if I was on just watching this, I would probably trimmed a little bit off here. Again, the big level is 1360s, 1340s. All right, last two setups in FX. Quick look, we just covered Kiwi. Quick look at Aussie. Here's the same sort of scenario that you're playing with that I'm looking at with the SPX, right? A break of resistance. Is it support? Here's Aussie. A break of resistance. Is it support? It's a very similar scenario from Kiwi, only Aussie stretched much deeper, right? We're already making it through the 618. Kiwi's just trying to make it through the 50. So a little bit higher of a stretch here. Same type of scenario, guys. This could be a massive fake out. I don't know. Look how we opened the US trade session if we buckle back below that slope. Personally, just so you guys know, I was ideally looking for a short off of right here. It's your objective yearly open. Beautiful. 100% extension off the low. Beautiful. Upslope resistance. Beautiful. If we get a rally into there, into the close of the week, that's sort of my ideal spot. Otherwise, if we buckle back below that slope, you could see the resumptive move, but I wouldn't be involved there just yet. Questions on RB, the Aussie. Got the RBA Governor Lowe. He's got a speech later tonight in Australia, but not likely to get too much play off that. Just do be mindful of that. It is on the docket. Okay, last but not least, British pound, probably like the sleeper cell amongst all of them. Nothing seems to be able to wake this thing up. It's been like pulling teeth. It's like watching paint dry, man. This thing is just completely snooze fest. So you look at the weekly chart, you wouldn't think it, but it is. We're right slap in the middle of the yearly range thus far. We are sitting on the objective yearly open. It is the most, it's a big turnoff. It's the least sexiest trade out of there. Let's just say that, right? We're just doing nothing. So when the weekly charts are like that, guys, I tend to not even bother. So Aussie levels, we went over that. Those are unchanged. We've already broken the 618, and now we're testing this as support. Sterling, since the start of the week, man, this thing is just range galore. So the daily chart, here's your monthly open. You started off with a 3-day ripper into the 618 of the yearly range. And then we pulled back, and ever since then, snooze fest, right? Snooze fest. So here's what it looks like on the intraday, guys. If you're into range bound trading, this is actually a good candidate because you haven't been able to make much of a clear directional break in either side. So levels unchanged. I'm neutral on this. Bearish invalidation, or the breakout level, as it were, would be 36.74. That's your 2021 open. The breakdown level, the level that would shift the focus clearly to the downside, is the low day close, 618. That's 33.78, 33.80. Until we get some formation clarity, some sort of technical formation or slope, I just think this is noise now. So patience pays in this business, and sterling is in this kind of thing. I think you get a directional break soon, but till it does, keep this on the watch list. Okay, really quick, just a quick note on oil. Everyone's trying to figure out what's going on with the oil trade. I'm getting a lot of calls from reporters about this. Is there a fundamental shift? Is there technical, reason to think that we're turning lower? And I tell everyone the same thing, guys. We're just responding to uptrend resistance. Take that for what it's worth. If you're a really like short-term guy, yeah, maybe even trying to fade some moves on the recoveries. You're trying to get maybe a clip of the monthly open or the January 2010 high. If you're a longer medium-term trader, you're doing nothing here. If you're a really long investor, you're just waiting for the pullback, a deeper pullback to buy again, because you're just holding longs. So it really depends on what you're trying to do. At the end of the day, we are coming off of uptrend resistance. So if you are going to take a short side trade on this, you're very nimble. You're doing it with the utmost humble nature, because we know that we're fighting a pretty strong uptrend. Ultimately, you want to get long on this, right? I think $100 a barrel is like on the cards. I don't think we can even argue whether that's going to happen or not. It's just when. Here's oil on the weekly charts. Okay, you had the fourth reference point of divergence, with price action making a higher high, a higher high, a higher high, a series of lower highs. So that's not giving you anything, right? If you tried to fight that signal, you've been sitting underwater for the last year. And it's even from a slope perspective, I just think the exhaustion is there. You got the 618. I told you guys about this on Tuesday, the 618 from the decline off the highs you made in 2008, but that's going to the zero clip. In futures market, it's going to be much lower because you go -40 on that dump back in 2020. So I'm not putting too much stock in that retracement, but at the end of the day, the daily chart is pretty clear. 87.14, 85.61. That's the pivot that if you break below, all right, now we're talking a more traditional, right, correction. You'd be looking for like a basic 38.2 retracement of the advance off of that December low would give you like 81. You know what I mean? But that's all contingent on this major pivot in price. You'd have to really buckle below this pretty strongly for that level to manifest. Till that happens, yeah, I think maybe just get a little bit more of softening from uptrend resistance. Look for 87.14 support, 88.12 is the objective monthly open. Any questions on oil? All right, last but not least is Bitcoin. It's been a painful trade for some people, but we've been trying to assess whether we're actually breaking out or not. I've told you guys, I'm sort of just a fisher here for Bitcoin. I don't take this as a trade. It's more just as a long-term build, kind of just wanted to build and have exposure to it. So we got long on that drop last year, or into the start of the year rather, into 41. Thought that was a really good drop. Next level was 35 and change. That had to hold for us to really respect any type of possibility for an uptrend. If we break below basically the lows that we made here, it'd be pretty problematic because that's the median line. And that would basically like risk a dump all the way into 25s and 19s, and things could really get fall apart. So listen, the slope isn't so dope here, okay? We kind of broke above it and middle below. At the end of the day, want to see on this pullback, if it is legit, I want to see constructive support ahead of 41.50. 41,500, that's to say. Near term bullish invalidation at this point gets raised to the September lows. It's 39.5. This is sort of, again, your breakout zone to validate the shift higher, but not the ugliest setup. It's actually been responding to slope rather well. It's a basic high, low, high. I've showed you guys this a million times, right? Decent plays. If that's the break, losses should be limited to this zone. All right. Ethereum, yeah, Ethereum's in a similar scenario. It actually had a stronger response. I don't have an intraday scalp, but I had a strong response to a 38.2 here. Looked like it was breaking above yesterday. Now it's threatening maybe an outside reversal candle, actually. So similar scenario in that you're coming off uptrend resistance, might be a little tired. Might be a little tired. All right, that's everything on my list, guys. Let me know if you have any other questions or trade setups you're looking to review. Keep it light into the close of the week. This interest rate expectation, or this should shift interest rate expectations, guys, with it running hotter than expected. You're going to get all the hawks out there saying, well, the Fed's behind the curve, which I completely agree, but that they're going to have to hike 7 times. There's been people who are saying they're going to hike not 25 basis points per lift, but 50 basis points per lift. I think that might be kind of aggressive. I'm not in that camp per se, but there's going to have to be a tightening, a more aggressive tightening, either way you look at it, because 7.5 is no joke. Can we take a look at some Aussie? Well, you always got the interesting crosses for me there. Aussie Swiss marching. I don't even think I have that on my list. Oh, this, yeah. Near-term exhaustion. Near-term exhaustion. Watch this. Watch this here, because this is your objective monthly opening ranges from last month. It's the yearly opening range at this point. I did cover this for you before earlier, didn't I? And that's a 38.2. It's actually a decent setup. Watch this. Oh, well, you know what? That's your high day close. We're there right now. Is it? What's the high here? 66.78, 66.70. It is the higher high. Okay. Yeah, watch 66.57 right now. That's the high close. Uptrend resistance. And you're pretty much testing, you know, downtrend resistance right now. That's huge. This is huge. Watch for inflection here today. Marching. Good catch, man. Is the 618 there? Let me just see one thing real quick. Woo! 618 extension is right there as well. I'm not going to leave that on there, but I just want to show you. Might be a decent short position just for a near-term pullback. All right. I don't have the intraday for you, but for support, just watch that initial high. Something like this. And one last thing I would look at is a retracement of the yearly range. And the 618, that's critical support there. That's your breakout target there. All right. Marcin, take a quick snapshot of that screen if you want to keep those levels. Not bad. What was the other one? So that was, let me write these down here. Aussie, Swiss, Kiwi Swiss, and sterling Kiwi. Kiwi Swiss looks like this. Let's see. At resistance. They're close to it. This is the yearly range retracement. That's the 618. You're at resistance. Okay, so this is gonna be, it's gonna look too tight on the daily chart, but something like that. You know what I'm saying? Here's what it looks like on the 2-hour. If we were to, again, let's just bring everything on board here, right? It's resistance 62, right on the dot, 6204. Absolutely critical. Look for inflection there. If that breaks out, right? I mean, we can just bring up the other retracements here for the 76, but you're basically looking for a rally back towards like the high day close right here. The high day close converges on the yearly objective yearly open. So you're looking at like, what is it? 6240 into 6245. So another 40 pips higher. You know what I mean? Something like that. That's your monthly open down there. Huh. Near-term support. I mean, I would have bullish inval for this near-term rally like at the weekly open, but that's way down here. That's like 61. So I don't know if you want a 200 pip, you know, you're in support zone, but I'd be looking for inflection there. All right, Marcin, does that help? Take a snapshot of those if you need that for future reference. And your last one was sterling Kiwi. I'm already long from 61. Well done. Well done. Yeah, this is your first problem zone, man. Right here. It's important. It's important. Median line resistance, Fibonacci resistance, former swing lows. 6240 is a big pivot zone. If it breaks above, I think you get a nice rip. But on your position, a good area to lower position size, maybe raise your stops. All right. He says, thanks for your advice. Hey, Martin, you're more than welcome, sir. You bring up some decent setups. I mean, some people look at obscure stuff, and I put you right up there with those guys. But you do bring some nice setups. So feel free, as always. Here is sterling. You wanted sterling Kiwi. I'm sorry. Oh, now this one, not quite as not quite as tidy. I feel like we've looked at this one before. Made a 618 of the rally off the lows, 2 equal legs. It failed there on a massive chop fest for a while. Here's the pullback. I'd have to say I'm neutral on this. I'd have to say I'm neutral. You'd have to have a really strong opinion on Kiwi, right? Because we looked at Sterling. Sterling is doing like nothing versus dollar. It's just sitting there. So yeah, on this trade, I mean, I do see and recognize the risk for a pullback margin back maybe towards the median line. I mean, a 38.2 would be below 199, but or below 20 here. But you know, back to the median like here, right to the 2 handle before we start moving off. Big resistance is all the way up here. But on its face, I would tell you this. Let's just forget the 100 and that. All right, let me actually bring that up and keep the 618 on there. Forget that. All right. So that's the 618 of the decline from the highs we made again back in 2020, right here. And here's the pullback, right? On its face, it looks like it made a break of the objective monthly opening range, and it looks like it may have broken the upper 75% parallel here. If that is legit, losses or rallies should be capped by 203, 203.50. And on the way down, like I said, you're looking for somewhere near 2. Was short from the 618, that's 2. Oh, nice, whole move from 2020 top. Yes, excellent. Yeah, I have it. Well done. So you're thinking, how deep does it get? Yeah, so you have to basically be governing this one real close. Let me just do it. Well, let me see what I have here. Okay. Spot of support. Spot of resistance. Okay. Okay, and a shallow correction, if it's not going to be a full 38 all the way towards the median line there, a basic 236 gets you to 201. 201, 202 there should be pretty interesting. All right. Nice trades, Martin. Well played. Well played. Don't get too aggressive on this one because you know it's still a pretty strong uptrend, but I do think you're on a decent path there. Sub 204, I think the risk is still for a drill down towards that two-figure proper. Does that make sense, Martin? Does that help? Interesting setups. All right. He says, yes, thanks to you. Thanks once again. You're more than welcome, Martin. Iman, Steve, Ted, Aurelian, Agnes. I'm not going to get to all of you, but always a pleasure to be with you guys. Stay light, okay? We got some nice breaks to the U.S. market open. Should be pretty telling. I'm still sitting in that euro short, hoping to get the deeper drive a little bit lower. But again, all of these trends are kind of back and forth. So it's not a trade. It's not a market, guys, where you want to sit in a trade for too long, right? We get a lot of back and forth. So hopefully we get some play here. Stay light into the end of the week. And I will see you guys all on Monday morning for the free session on Daily FX and right back here on SB on Tuesday and Thursday. Best of luck trading, guys. Have a great weekend. Man, same to you. Cheers, mates. God bless.